Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, November 7th, 2025. It is 10:56 a.m. Eastern Time, so not even midday yet. We're about an hour and a half into the trading day, and just wanted to get one out to you guys. I'll just focus mainly on the markets and the semis, which again, I've been putting a very high emphasis on the semiconductor sector, saying that when it goes, the market will go, and that's gone now, so we should be all clear. Especially on those longer term swing and trend shorts. Remember, I'm starting out here with the 60-minute chart NQ I've been showing you. And so we hit that fourth target this morning. There's that bullish falling wedge. I showed it to you on QQQ today in pre-market, and we never took it out. So we're now below T4, which increases the odds we're going to go down to T5. And remember, this was a for what I call short-term swing trade. Trade expected to last just days or weeks. Longer-term targets, which I'll get to in a minute, remain on the daily and weekly charts of QQQ. So that's it. We still have some positive divergence. The semis, as I'm going to get to in a second, the sector itself, SOXX, has broken down. Clear, solid sell signal. We have quite a few coming up on support. But again, you get to the point when I call it the POR. I've talked about that. It's a term I made up years ago, point of recognition, where they get it. We hit that POR. But I told you the same thing would happen recently with gold and silver. Popped that bubble when my call for the dollar, which is a very contrarian call, popped above T1, the first target zone, ran up to the second target zone. And what did it do? It put the screeching halt on the rally in gold and silver. And so the same kind of thing. It's just when collectively, I imagine, I don't know. I don't know what other traders do, but I am a very, very, very diversified. I watch a lot of different things. We try to weave all the fabric of all the things that make the markets tick, the important things together. I mean, there's an infinite number of variables in the stock market, but at any given time, a few weeks back, it was the business BDC, the private credit. Long before it made the headlines, like I told you, it would make the headlines. If it broke my support, went down, hit my final target, bounced. And then the media started picking up on it, and that had, like I said, a ripple effects. Even though that sector hasn't completely collapsed, what it does is it puts strain on the credit markets, because now new loans going forward, the existing loans, if you have a covenant that's loans already generated, then that's that. It's out there. Now, it can affect the pricing, most certainly, when there's problems in the credit markets. But what it also does, it's constrictive to new credit, new originations. You can bet your bottom dollar, since the Tricolor and First Brands bankruptcies, you can bet your bottom dollar that both banks and private credit are now scrutinizing new loans applications to new loan generations with a much finer tooth comb than they were before. And again, so the Fed cut a quarter point. Market should blow up to new highs, right? That's what the bull said. No, well, it hasn't. And again, technicals on the stock market plus the fundamentals are really starting to get to the point where I don't think they can no longer be ignored. And this whole blackout with the government shutdown, we'll see where that goes when they turn the lights back on and start looking at jobless claims and things like that. All right, NQ, Nasdaq 100 future. So that's it. We've taken out T4. Look, we still have positive divergence. I'm going to get to the semis here in a second, and the market leading stocks. There's a lot of stuff at support. So it wouldn't surprise me. I'll tell you, my degree of confidence, as I kind of conveyed to you today in that first post in pre-market, my degree of confidence on bounces and my willingness in price targets start to diminish to game the counter trend bounces, because again, I use that term point of recognition. So, these bullish setups, we had positive divergence here. You can see each of these targets, we gained, nice bounce. We had T2, we bounced up. My target was a bounce back to T1. We overshot it by 1/3%. Then what did we do? We went down. T2 had already been hit, right? So that opened the door for T3. What did we do? We bounced up back to T2. Remember, these targets are price support levels on the way down, and support once broken becomes resistance. So now we went and we've overshot T4 by a bit. We're there's a mild support here. Again, I'm going to go through multiple time frames, multiple charts right now, and I'm looking at that little reaction low there. So, but what I'm going to do, I'm starting here short term. This is how my mind works. I'm going to work my way out to the longer term charts, which are much more technically significant. These short term charts are great for active traders. Try to gain the little zigs and zags if that is your cup of tea, your wheelhouse. But if it's not, like I said, and I always make a point, and I did again today, define your trading style, have a trading plan if this is not your cup of tea, because you don't have the skill sets or the time to be in front of the computer 24/7 during, or at least during market hours, or the inclination, then you're a swing trend trader and the daily charts are your friend and the weekly charts. 60s help you get in early. In the 15-minute chart, which I'll turn to here in QQQ in a second, that is also, there's the comparable T4 level. Remember, the futures, quite often you're going to see different price targets. Sometimes they align because the futures, the Nasdaq 100 or any futures contract on the indexes, they trade virtually around the clock. They trade 24/6 really, 23/6 if you will. They have a 1 hour shutdown period from 5 to 6 Eastern time. And other than that, they're trading around the clock every day, Sunday evening through Friday evening. So Saturday's the only day they're not trading. And so you're going to get different levels there. And again, this is T3's been taken out. We never broke out of the bullish falling wedge. So once we took T3, we're there this morning in pre-market. And when we took it out, that was a sell signal. So that was the cue to reverse back to short if you tried to game a bounce, or if you're waiting for the breakout above the wedge pattern, the downtrend line. That never came. So we never had that buy signal. All right, so that's what it looks like. Now let's step out to a 60-minute chart. This was the most recent trade. We had a sell signal here. We went down. We had two targets on the short-term chart back then. Where was it? 60-minute chart. No, this one was... oh, yeah, all part of this same trade. I'm sorry. This was the previous trade before. That one was stopped out when we went over whatever that stop was on that last trade. We had a daily close above, I think, yeah, whatever it might show on this one of these charts. Okay, back to this 60-minute chart. We're coming up on support, but what it tends to happen, once you get again, I've talked about this for weeks, if not months, how this has been a crowded, one-sided, very hot trade, and what I've been warning of or predicting is a crowded rush for the exit. So what happens when you get that? You start smashing through support levels like they're not even there. Once again you hit that what I call POR. It's a collective, the mindset. And I can't say we're there yet. I'm going to go over these charts. The day is very young. They can stick save the semis. I'm going to get to that in a second. But they're not going to stick save QQQ. So I'm just going to be very clear right now. Nothing, and I mean absolutely nothing, is going to negate today. Next week, maybe 2 weeks from now, but nothing's going to negate the recent sell signals. That's a break of this primary uptrend line right here. Back test, which again was just a marginal slight new high, didn't violate any reasonable stop for the long-term targets. It was about from the breakdown point, about a 3.5% pop up to back test the trend line. Then we had this secondary trend line that's been taken out. Now we're coming up on the 50-day moving averages. So this is what I'm going to talk about, and I did yesterday and quite a bit recently. The 50 days are where both man and machine alike, humans and trading programs, will step in and buy. Not always. Again, when you have a crowded rush for the exits, what tends to happen is you smash through, you start to at some point, once that POR has taken and kicked in, where again, collectively, for whatever reason, the masses start to realize, hey, I don't want to buy the dip anymore. I've been buying the dip. I've been buying dips to support. And yeah, they were working a little bit. They started to work. Again, that's why my bounce targets were shallow. Once the breakdown, once you're on a sell signal, if you're going to game counter trend bounce as an active trader, and you have longer term targets, don't get greedy. You make a percent round trip, 2% on the Qs, NQs. Again, if you trade futures, I don't have to tell you how much money even one single contract puts in your pocket. And if if the NQs are too big for you, MNQ, they have the minis. MNQ is the micro or whatever it is. I think it's a tenth of the leverage factor. It's the same exact price levels as the NQ charts that I post. But if you don't have the the capital, but you do want to get into futures, MNQ, just like they have, I think it's MES for the micro or mini S&P 500. The Russell is, I think it's M2K for the Russell 2000. There's minis on just about everything now, guys. It just, again, and the good thing about it is, I'm posting the main contract, those charts, but if you're trading, they use the same exact price levels. Again, it's just a smaller multiplier, which is the leverage factor. Usually, I think, it depends on the contract, but I think the micro or E-minis or whatever they call them are about a tenth a less leverage factor than the NQs and ESs. All right, so let's look at a couple other time frames. This is QQQ. There we are. We're at the 50-day. But again, these sell signals are intact. And what tends to happen is within a crowded rush for the exits, you get corrections in a regular bull trend. You buy the pullbacks to support. You buy the 50s. You buy pullbacks to the trend lines. But then the more lopsided sentiment gets on a trade, again, it's what we call a crowded rush for the exits. Bull markets die or end when supply and demand has now equalized and reversed. In other words, the only thing, it's very, very simple. And there's a lot of market participants out there, both institutional traders and individual traders. But when there's more buyers of a security, prices are going to go up. It's very simple. It's economics 101, supply and demand. And then when that shifts, and so what happens in a bull market, and this is a great example I talk about all the time, that just about every bull market top I've ever seen in the big corrections, they end on blowout quarters. So everyone, if you're right now confused and you just saw the big tech stocks report these phenomenal quarters, just massive amounts of money, beating expectations across the board. Last I checked, 80% of the stocks have beat expectations this quarter. And if you're baffled as to how, I can be even more bearish than what we've just got here longer term, it's that how much of that was priced in and then some. And then again, even if the fundamentals are strong, when everybody's bullish, as sentiment extremes get, then the last bull has bought his or her share of stock. What else are they going to do? They have no more cash. So you can be foam at the mouth bullish, but if you're leverage out, which I've showed you folks are, I've showed you the peak in the margin interest, all-time highs. And that tells me that not only is everybody bullish and, put every dollar, again, I'm speaking generally, not literally, metaphorically, but not only do they have every dollar committed to the NVIDIAs of the world and Bitcoin and silver and all that high-flying stuff lately in the Nasdaq 100 and a big FANG Mag 7, 8, 9, 10 stocks, but they have more than their account value is worth. That's what the margin debt shows us, that you put $1 with your broker, they'll let you buy $4 of Apple if you want, or even more if you go into futures. And so the unwind is one of the most beautiful trades to make when it happens. So we'll see here. So this is it. So I'm going to highlight the support levels where they could come in and buy, but I'm also going to reiterate that we have now, again, Nasdaq already broke down and back tested. So we've been short that. That was the original short entry there. Then if you've got granular, you were adding to. I said you can add if we break the lows from that breakdown day. That was the what was the day of that drop? The October 10th lows. I gave you these color codes. You could short a kickback to this rally, but I was very, very adamant. No more shorting above this level until we backtest the trend line. This is what it looks like on the 60-minute chart. Might look like a slight violation there, but it never got violated on the daily chart. That's, again, the purple trend line right there. And the daily is a more significant time frame for swing trading. This is what the weekly looks like. That is a fat bearish engulfing candle. I know there's been a few critics on the site, but I've addressed that recently. Do you? I'll do me. You buy, dips, but be proactive. Don't come out of the woodwork when we go up here. If we go up there, give your plan if you're buying dips, and if you think these are buy signals, these bearish engulfings. And again, some work, some don't. That's what I've said. This one didn't prove to be the exact top, but it was damn near. We made a marginal new high and then put in that second bearish engulfing on the weekly. I just had a price go off, price alert on Broadcom. Let me get to, so this is it, guys, in a nutshell. Long-term swing trend traders, what I'm looking at here, again, as I was back here, is a potential top. And that was a hell of a drop. We gamed it. And again, for all the reasons stated, covered there and went long. And all the market did and made a marginal new, again, relative to this is the big picture here. If you're trying to, look for a top in a bull market, this is the bull market, the secular bull market off the '09 lows. So this high right here is marginal, ever so slight over that previous high relative to the scope of the whole move and relative to the targets. If you're new to the site, these are the targets I laid out first last year. 1, 2, 3, 4, 5, 6, 7. 3 was hit at a time, again, state all the reasons stated. We were going to bounce. We had the Trump tariffs were overdone. I predicted long before Taka was a thing, he would cow down and back off. And the markets exploded when that happened. We shorted up to, but not above the 200s. That was a very clear trading plan at the time. In fact, after milking that entire move off the bottom back to the 200s, that was where we tried shorting. Then no more shorts. And we had a couple of 1 or 2 official short trade edges based on the daily chart, not just active trading, 60-minute, 15-minute chart stuff. Now, this is, again, the by far the best technical evidence to short for a swing or trend trade that can last weeks, months, and possibly even years. As I said, we'll get going. So T3 was hit, as we often do, bounce off the initial tag of each target. And since it's already been checked, T1, 2, 3, if you want new targets, let's say that, again, this is a continuation of a longer term call, if you will, not a trade, because again, I stated covering all my shorts and recommended as such and going hard long on August 6th, whatever it was there. So it's not really one of the same trades. As an active trader, I'm in and out, long, short, 20 times the NQs at least since that time. But now we have a more significant potential top. And these are still the targets based on the projections on the charts, fundamentals and technicals. And just to try to measure it out from where we're at, or we'll close enough. We'll just start this week's high because this is this week's candle. It's going to be about a 58% drop. So, and I know most think there's no way in God's green earth that's going to happen, and that's fine. And nor would I plan to be short the entire way down. There'll be plenty of bear market rallies, very powerful along the way if that pans out. And guess what, guys? If it doesn't, that's what stops are for. Right now, we put in a big fat bearish this week. I think it's safe to say you can put a stop over that one, just like I said over the last one there. That was the one. We had a stop also under there, and you could have put a stop, and then you're back in. You would have been back in on the rejection or on the 15-minute charts when we shorted right here. This was the most recent objective short entry off the highs, that is. And then, of course, kickback rallies, and now here we are. So I just wanted to say check is what I'm getting at here. So, and more importantly, let's segue over to the semis now. So spent, quite a bit of time. This is a different board. I have a couple different board. Let me flip to my main board. There's my main board. Stocks weekly. Nope, that's not, is it? All right, we'll use this one. Same story, divergent high. I covered this, it might have been the index I covered on the weekly. So we have a divergent high right now in the semis. And as I've been saying, and did an extensive video this week, when the semis break, the market will break. Semis are broken. This is a fat bearish engulfing, as was this one at the high. That one wasn't, because you didn't get the whole body of that one right there. So this is the first bearish engulfing, and this is where you want to look for them. You don't want to look for them here, here, here. That they're topping sticks, reversal sticks, or potential topping sticks. You only want to look for them and act on them at the end of a prolonged uptrend. And the rule is the body or the fat part must engulf the body of the previous candle. And that's what this has done. And we've taken out the trend line. This is the one I covered in the video the other day. I don't have to squint to see if we broke it. I had an alert this morning, and we're well below it right now. And now let's go through the semis, because like I said, I think this is will do the trick to kind of solidify sell signal on the market. And we'll see. Time will tell. And if not, guys, there's plenty of other trades out there, long and short. I'll get to those in a separate video. As I've said a few weeks back, somebody asked for more long trades. I said I've been struggling to find objective longs. I've even thrown a few out to you that I said, here you go. Looks objective. I'm passing because the market looks toppy here, but if you like them. So I'll continue to do that at all points in time. And even if I'm not finding longs and a lot of objective longs in the stock market, there's always a commodity. Remember, commodities are very diversified amongst the commodities arena. Wheat has nothing to do with copper, absolutely nothing to do with copper, and nor does it have anything to do with natural gas. So you have all these different commodities with different technicals, different fundamentals, and so at any point in time, there's going to be something to go long if you're not a big short seller. All right, so that's it. That's I don't have to squint to see the breakdown. There was a trend line I gave you the other day. We had the initial breakdown back test, and now we've taken out the trend line. So let's go through some of these. NVIDIA at support. I just had a price alert on NVIDIA today. A couple of them actually. Took out the 50-day moving average. But again, I've talked about this. It's not unusual to see brief punches down through their intraday or single day, and it's also at price support. So might be not a bad time to. I tell you what, it wouldn't be doing right now. If you didn't short this morning when we started to break it down, right now you get the biggest semi at support, dual uptrend line and price support. I'm going to say this too, that yeah, this is where the buyers, I'm doing my little air quotes with my fingers, should step in, but they may not. And what happens is once you get a sector breaking down and the majority of the components, it decreases the odds you're going to get a meaningful bounce off those levels. Doesn't eliminate it, it just decreases the odds. So we do have the big dog, the 800-pound gorilla in the sector at pretty decent support. You can see both price, trend line, a little bit below the 50, but the 50's taken out. So, you want to give it on face value, it's that level's been taken out. Broadcom, here, let me pop up my alerts. I'll show you. And this is, again, what I've encouraged everybody to do recently. Let me do historical alert log, pop this out, bring it over here. This is today alone. Remember, I kept telling you there'll be a day when they start going off like popcorn. At that point, you got to move fast. So I've had alerts on. You can see here all these. This is SMR, EWA. That's a country. I think that's one of the country ETFs, international indices. NVIDIA, MicroStrategy, Open, Broadcom, SMCI. I'll try to cover that one too, since I'm covering, it's related to NVIDIA very much so. They set up the server stations, so it's kind of a proxy play on NVIDIA. SOX, NVIDIA, and Broadcom. So you can see all the alerts that triggered today. And I'm going to rifle through these. So we have a breakdown. Again, the day is young. Let me repeat that. The day is young. It's 11:21 now. They could stick save some of these. This one just hit the 50. And remember, I did that video the other day. I told you they come in. Some more than others. They buy the 50. So there's going to be some. It's just a matter of there are going to be more traders that step in and buy to offset the selling today or not. I can tell you. So it's kind of a mixed bag. You're breaking trend line support, but you're also at the 50. And most importantly, again, it all comes back to this. I'm going to go over these individual components. I'm going to keep doing that. But this is the most important thing. The sector has broken down. But I like to collectively look at all of these guys, especially put a bigger weighting on the ones I'm going over in order here by market cap. And I put the highest weighting, on the biggest companies. So you have Taiwan Semi also at really nice support, about 279.76. It was an all-time high. It tried for about a week or two to struggle with that level. Had a nice big fat green breakout candle. Beautiful, perfect back test of that level. It's back testing again. So again, I'm going to say this, and I'm not being facetious. There are a few of you on the site that are very bullish and think the market's going to keep going up and want to buy dips. If you don't buy now, when do you buy? Now, we see things different. So I also see a breakdown of the primary trend line and a support level that, whether they buy it or not, the only thing that starts to change is if SOXX clearly takes back the trend line. That means not a back test, not an intraday move above, only to close back down on or below it, but a solid close back above it. That would certainly change things, as would a recovery of the primary uptrend line on QQQ. Unless that happens, I'm not going to talk much about it because we have sell signals and they continue to build. Taiwan Semi is also at that 50-day moving average. So today's Friday, guys. I don't know where we're going to park today. As I like to say, with sell signals, the redder the better. But they're going to be, again, at least some dip buyers. I don't know if there's going to be enough to kind of park this thing about where we are now or higher, or if they're going to sell it in the close. If they sell it in the close, and you see a lot of these companies take out, well, as I'm doing this video right now, if we close much lower than we are today, in other words, we close at the lows of the day, today has all the making of a trend day. Guys, if you don't know what that is, a trend day is they can be bullish or bearish. It's when the market opens and usually with a gap. It gaps down, and a trend day is it just steadily moves lower throughout the day to finish at or near its lows. Bullish trend day is when you gap up and then you just rise and pretty much end up around or at the highs of the day. Trend days are pretty bearish, right? So be looking for that. I'm doing this now, so you have plenty of time before you decide what to do for the weekend. Do you go home short? Do you go home long? Do you do nothing? Again, that's up to you, depending on your current positioning, your outlook for the market, and everything else. Let me go back to semis. Try to get the video out to you guys. So, all right, so that's it. Stocks, where was I? I was on Taiwan Semi. Trendline support broken, at price support right now. Again, nice breakout, back test again. So this would give me another check mark. That's how my mind works in trading. I have check marks. Check mark 1 was a break of this uptrend line here. Check mark 2 was a break of this trend line right there. Check mark 3 will be a break of the intersecting 270. Oh, wait, check mark. Oh, yeah, we're on the 50. Check mark 3 will be a solid break, especially a daily close below 2, or pretty much where we're at right now. 279, 76-ish, plus the 50-day, which we're testing right now. That will be another check mark on one of the biggest and most important semis out there, Taiwan Semi. AMD, already covered it in the video the other day, already put in a divergent high, sell signal, just keeps moving lower. A lot of white space between the first target and supports. ASML, again, I'm just kind of recapping what I covered the other day. Breakdown, nowhere near its 50-day yet, so plenty of downside left. You can see my targets. Again, these were all covered the other day, so I'm going to whip through them a little quicker. Micron still above trend, pending a sell signal, and of course, it would just simply be another check mark. The more you get, the higher, or at least the more I get, the higher my degree of confidence is on putting on some aggressive swing shorts on the sector, on the semis, and holding tight until my longer-term swing targets are hit, and not really focusing too much on the 15-minute charts. I like the 60s, but what I like to see on the 60s to reverse after a trend change is positive divergence on the 60 minutes. We don't have anything remotely close. This is SOX. I just stepped down to a 60. 60-minute chart. There's a breakdown on the 60-minute chart. Big divergent high right there. Nothing remotely close to positive divergence right now. So I can tell you, barring some incredible reversal today, I'll be going home quite short this weekend. All right, so next up, ASML, I think I already covered. Yeah, Micron I covered. Lam Research, LRCX, coming up on its bearish rising wedge pattern with a sell signal pending a break of that. Again, same targets I would have given you the other day. And a minimum target here is you have the 50-day coming in with this 138.53 price support level, give or take. So that's that one. Qualcomm. Oh, and let me reiterate in case that you'd missed the video I did, and I covered it earlier this week. One of my indicated the Hindenburg omen that I've customized for the Nasdaq, which I don't cover often, but I have had at least 2 signals fire in the last week or 2 here. And that's a crash indicator, guys. And I'm not trying to be dramatic. I don't sell drama and make these grandiose calls. But when I get that, it increases the chance that we could have a crash-like drop, a swift and sudden drop. Again, it's not going to be Black Monday 1987 because it can't due to circuit breakers, but we could hammer down pretty hard come Monday or next week based on those, the Hindenburg firing and, or at least the Nasdaq, my customized version, and these sell signals we now have on the semiconductors today. There's AMAT, broke that 229.72 support, and the bearish rising wedge pattern. ARM, ARM. I'll just click through the rest of them. You can see some holding above support, most of them still well above their 200 days. But as I go down this list, they have a smaller and smaller impact, because they're smaller companies with a lower weighting in the sector. Not as they don't have the same impact on the Nasdaq 100 or the S&P 500, or of course even the semiconductor sector that Nvidia, Broadcom, Taiwan Semi, AMD do. I'm going to give you one other little target here. Support level, really. These are levels now that the wedges are broken down. They're just levels that'll trigger the next wave of selling, most likely, if taken out. Texas Instruments, I told you that was like one of the better looking charts, but I'm not going to buy Texas Instruments. I told you the other day, if I see a sector breaking down, the semis, and I see the vast majority of these, I'm bearish on almost all of them. Why in God's green earth would I try to swim against the tide there? So again, I throw it out. Maybe something else is going to happen. And again, I know there's at least a couple that have been vocal on this site that think the market's going to just roar into year end and go a lot higher. So I point out these opportunities for you, whether I take them or not. So it's Texas Instruments, Analog Devices. Already broke down below its bearish rising wedge, following the divergent highs, been zigzagging lower, testing the 200-day moving averages, and you know where my targets are. So that one's clearly been on a sell signal. Marvel just broke down today, took out the trend line I gave you the other day in the video, and hit that first support right there, 85.31. It's kind of slowed things down. You can see when you hit support, you kind of level out. Buyers will step in, and then once that level goes, those that stepped in to bought the dip realize that, again, if this is how you should trade, if you're going to buy support, and you're bullish on Marvel, and you want to wait for a pullback to support, you didn't want to chase it and got a little frothy, your plan was to buy at 85.31 or give or take a little above it, then your stop should be not too far below it, maybe below that 50-day. So if it takes that out, then the next stop is going to be my next target, and that intersects with the 200-day moving averages. If that goes, as I suspect it will, then you come to this uptrend line, And all said and done, that's going to be a drop of about 18%, 17%, if hit. NXPI, MPWR, again, beautiful little uptrend line, breakdown back test. I covered this in the video the other day, and what did I tell you? I would have told you it was dancing on its 50 days, right? They buy. And what happens when the 50s are taken out? It's down 5% because it lost the 50s today. Coming up on the next support / price target with the next stop down here. So once the majority of these stocks take out their 50s and their uptrend lines, they're probably going to visit the 200s if you want an idea on how far this correction is might go until you get a decent bounce. This is where they'll probably start, stepping in to buy them for more than, a few hours or a couple of days. Unless there's a crash-like scenario, you could go right through the 200s. I've seen it happen before. MCHP, okay, this one I believe I would have covered in the video, the importance of the 200-day moving averages. Rejected in a bear market. Finally, we took them back there. One clear breakout, rallied up. Testing. These are the red and the blue are the 200 exponential and simple. And I like to say some traders like the exponential, some like the simple, hence I like them both. Give the last of the two the benefit of the doubt. There's no doubt about it now. We took it out today. And again, did it meander on through? No, we're down. The stock is down 10% because it's clearly given back, lost its 200 days. And historically, that's usually when a bear market begins, or not begin technically at the top, but it's when it's, again, traders will realize something's wrong. If you waited to short the 200 breakdown there, you made 60% on that stock last time. All right, guys, I could go through them all, but I did it in the video the other day. You can do the same thing. All you have to do, I don't know how many other charting platforms do this. This one loads the components of an ETF or a sector, and that's what I do. I sort them by market cap and go through them that way. So that's it. I could sit here and keep talking, but we have the sell signals I've been waiting for to solidify or increase the odds that that what we have going on in the stock market, that I can now start to turn my focus away from, more so from that 15-minute chart we've been zigzagging and gaming down in what we call correction mode, which I'm sure most of the world thought we're in. And now I'll start to turn my focus to the longer-term daily and weekly charts. And as I've said, it's way down here. We have no risk of getting there today, tomorrow, or probably next week or anytime soon. But this is where I've been saying the odds for my longer-term weekly targets, those ones that I started out in the video, once this level goes, it should be a kind of a bloodbath type acceleration of selling if and when we get there. But there's a long way and a lot of work to do before then. On QQQ, first things first, we're at the 50-day moving average right now. So you want to see that clearly in the rearview mirror. They step in and buy the 50. And when they take it back in a bear market, it's bullish. And then they back tested it here. And it hasn't been violated once since right there. So with that goes, that will be another check mark. That's all. And just increases the odds of more downside. Increases it to where, on the daily chart, you can see right here, 556.87. We'll call that 557. You have the 200-day exponential and the 200 simple coming in. And so, again, there's a little work to be done here in the near term. Nothing would surprise me today because I just showed you, although a lot of stocks have broken down, quite a few, including some of the most important ones are at support, like NVIDIA. So nothing would surprise me today. We can bounce. We could have a 2% reversal. We're down, we're down about 1.75 right now in the NQs. Almost 2%, only about 1% on the S&P 500. And I look at stuff like that. The financials are holding up relatively well, guys. This isn't I don't want to kind of come across as, again, fear-mongering, because when things get ugly is when you start losing support on the other key sectors. The financials need to lose 51.30 right there. You have the 200-day simple and exponential pinching right there. It's beautiful support, in my opinion. It was an all-time high right there. We broke above it, couldn't hold it, kind of waffled around, fell and had a hard fall, came back, got rejected, tried again, got rejected, breakout, successful backtest, successful backtest, successful backtest. So this will give me a big, big fat check mark for the longer-term bearish case, increase the odds that we're going to go down to some of those longer-term targets. Otherwise, this could just be correction. Again, sector rotation, which can be very healthy in a bull market. I'm going to say that right now. To see a little hot air come out of the AI stocks and and all that other stuff. So, although we have quite a bit of check marks today, there's still some important ones, including but not limited to the financials, that need to break that level right there. So I think it's going to happen. I'm going to give you my opinion. I'm not trying to give you wishy-washy analysis. I'll tell you where I think things are going to go. But until they do, yeah, it's anybody's game. They want to stick. They want to hold the financials here, break above this downtrend line. You have this little descending triangle pattern. Oh, that might send us up for another marginal new and still divergent high. But this is based on the breakdown in the most important sector. Again, financials is the second largest, but it's dwarfed by the tech sector. It's a 13.68% weighting, or last I checked on September 5th in the S&P 500, versus XLK, the tech sector, which has represents a 33. That wouldn't be surprised if it's higher now. So a third out of 11 sectors, this one sector makes up a third. So like I said, the rest of the market can do what it wants, but ultimately the same stocks that carried this market up to new highs, all-time highs, will be, in my opinion, the same ones that lead it down on the next bear market and drag it down with the other sectors kicking and screaming with it. It's just how it works. All right, I'm going to wrap it up here, guys, get the video out to you, and I'll continue to hunt for new trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.